Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. There are many things for investors to be concerned about today. The escalating crisis between Russia and Ukraine, inflation, rising rates, energy prices, overall volatility. The question is, how long will this all last, and are there pockets of opportunities for investors that are out there right now? Well, joining me now to have this discussion is Michelle Schneider. Michelle is with us. Michelle, thank you so much for joining. It's always nice to have you here on the show, and it's always good to see you. And I know you've been really busy, so thanks for making some time for us.
You're very welcome. It's great to see you as well.
Thanks, Michelle. So I want to start with the crisis between Russia and Ukraine, which of course is top of mind for everyone around the world. So right now, as we're talking, it is ongoing and it is escalating, and we're seeing the markets react accordingly, which isn't surprising. But taking a look at oil, which I know that you are someone who has been investing in commodities for a very long time, it's now at or near that $100 per barrel level. It touched at 100 at some point intraday during a session this week. How much higher do you think it can go, Michelle? Because that's really the question that everybody's been asking.
Well, $100 was certainly a target. There are many people who think $120 would be the next target, and that's possible. We saw some profit taking coming in at this $100 mark today, which also makes sense. So as far as, let's just step back and look at some of the fundamentals. We have Russia, obviously, as a huge player in the oil market. We have reserves which have been threatened to be released in the United States. Last time that happened, it really didn't make much of a dent. And we still have OPEC Plus out there as a big player in the oil market. They've been extremely quiet during this time. So right now, if we just step back and take a look at the technical situation, if it cannot get through 100, then maybe we'll start to see a little bit of a drop. Maybe it'll go back down, let's say worst case scenario as far as the technicals, $85 a barrel. But right now, really, the implication here is that it adds not only fuel to the inflation discussion that we've been having, it really pinches the consumer in terms of how much they're paying for gas at the tanks. And right now, too, we're in a very volatile situation where things continue to escalate. That's where we can see oil continue to go up. And I think something that has to be watched as a result of that is what happens with China and Taiwan right now, because a lot of people have eyes there because of Putin and Xi's relationship. They may be taking advantage of that, in which case, of course, we'll see all commodities continue to go much higher,
right,
including oil.
Right. And it brings up a really good point. As you said, we have to keep an eye on inflation. If energy prices continue to go up, as a consumer, around the world, whether you're heating your home or a business or just putting gas in your own car, that could have a significant impact, and especially in the direction that the Federal Reserve in the U.S. needs to go. I'm going to get to that in a second with you, Michelle, but I want to just go to the equity side for a second. We see where the S&P 500 is sitting right now. It has been extremely volatile on the equity side since the start of this year for various reasons. This latest escalation with Russia and Ukraine is certainly aiding in that continued volatility. Do you think we're in a correction phase right now? And do you think we could also go lower from here, these levels that we're sitting at right now?
Okay, so let's step back and take a look here at the best parallel we have for the current situation, which is what happened in the 70s. We came out of a huge trading range that was going on in the Dow starting in 1966 to 1982, where the Dow was basically trading between 1,000 and 600. So that's 40% range, right? So right now, if we look at the SPY, the bear territory, they say, is a 20% decline. But I think that instead of thinking about it as a bear market, we need to think about it in terms of the 70s, which is a stagflation narrative, which means that we could possibly find some kind of footing at about 40% lower. Maybe it wouldn't necessarily be 40% lower in NASDAQ. That translates to a move at about 360. 260. So right now, essentially what we're seeing here, I think, is whether or not we can establish some kind of a range. So yes, we're in correction, but no, I do not think that unless we get into World War III, we could particularly see it get much, much worse from here, which is why I think right now might be an actually unique opportunity to start keeping your eyes on certain pockets of the market.
Terrific. Thanks, Michelle. Yes, of course, we'll be keeping an eye on how this continues to escalate. If it does, more sanctions, I'm imagining, would be coming from the various Western nations that are part of NATO. So there's a lot to be mindful of and a lot that we don't know at this point. So let's go back to that inflation discussion. Of course, it's top of mind for every single investor across the board and anybody who's a consumer. We see the prices going up, and now we're talking about energy prices could really have a significant impact. Do you see the light at the end of the tunnel? Do you think, or is this runway really long ahead of us when it comes to inflation? And then the other thing is, what's the Fed going to do here?
Well, I really believe that one thing we haven't mentioned here is the food inflation. And Anthony, you and I talked about this a while ago, that it was a food inflation driver that was really going to create the whole inflation scenario that we're seeing all over the place, and that the precious metals were still relatively undervalued compared to what was happening with food. And so let's start with food, because right now we have to go back to Russia here, another blow to the already conditions that we had with a low production, which caught us off guard during COVID in terms of a higher demand for food, and then labor issues, and then supply chain issues, and then Mother Nature issues. Now you add Russia, where is a huge exporter of wheat. And you have a situation where wheat's been flying, soybeans been flying, corn, all of the grains. And so what that is telling me is that if we look at it just in terms of a food inflation, that's trickling over. And energy, yes, is a factor as well. But food inflation is run even hotter. So I think that I don't see an end to that right now, because it's not something that you can just automatically go and say, okay, let's plant a lot more wheat and everything will be ready by the summer, especially if we have any more drought conditions, which is definitely the prediction. So if you look at that as the driver, then I think we're still in for some pain when it comes to inflation. Now, if we switch over to the Fed, I think probably if I had to stay one of the top three people I would not want to be, it would be Jerome Powell in that top three, because he has a really, really horrible situation that he has to deal with. Do I continue to become more hawkish to control that inflation in a situation now where we have geopolitics running amok? Or do I really stick to the fact that I don't want to kill the U.S. economy, I don't want to kill the market, I can't obviously do QE at this point, but do I become less hawkish and let that inflation run hot, figuring at some point this will resolve and things will come back to normal? And I think I'm choosing for him choice B. So as we go into March, I originally thought that they would raise 0.5%, and I wouldn't necessarily say they won't. That's somewhat priced into the market. Maybe they'll go to 0.25%. That would definitely goose inflation further, but I don't think he has a heck of a lot of choice right now. He's certainly no Paul Volcker in 1982, who couldn't really care very much about the economy. He just needed to get that inflation under control, and he drove those rates higher. I don't see Powell doing that right now.
Yeah, and plus we saw, I think, 20% inflation at that point when Volcker was the head. So yeah, and I agree. I think that Powell certainly has a big job ahead of him. We expect here at UBS that he will raise rates as has been suggested this in the month of March. But of course, after that, he's going to have to really do some homework and talk to his best confidants to figure out what to do next. And especially as we see this potential crisis with Ukraine and Russia escalating, if it does. So let me ask you, Michelle, as we wrap up, we've talked about a lot of things here. Where do you see opportunity right now in this market, given the level of volatility and where everything sits right now with oil equities, where treasury rates sit, et cetera?
Well, I certainly want to be somewhat patient here, although after the big decline of the market when we were talking, which is on Thursday, we did see some buying coming in at the lows, and that's a good thing. But I do believe that there's always silver linings when you get these type of situations. So right now, one of the silver linings in considering the energy prices and the oil and gas prices is in solar energy, which has really been beaten to a pulp. If you're looking at some of the solar stocks, if you're looking at the actual ETF, broad in TAN or PBW, those could be really good opportunities to look at because, let's face it, the more expensive gas becomes, the more people will start to look at EVs. China's already making a huge increase in terms of their capacity for solar, their huge exports of solar panels. And I think this probably gives even politicians a unique opportunity to say, hey, we got to go back to alternative energy. So that's one area. More mundane than that, is really in the medical space. I'm looking at these sort of non-cyclicals, and people stopped doing a lot of the procedures that they would have done under normal times during COVID. So I think that might be a unique opportunity to look in the medical supply space. Procedures and things that people will go to, and that could help those bottom lines for some of those companies in terms of providing more goods and services for hospitals. And then COVID is still now in the rearview mirror more and more. Obviously, Russia's the big headline now. So people are going to go back to doing things, eating out, traveling, taking vacations, taking cruises, et cetera. Unless we go into a full-on World War III, I think there's opportunity there as well. So that's kind of our brief shopping list at this point.
Terrific. Michelle, thank you very much. 20% rates when Volcker was there. It's hard to imagine that level, especially with everything going on in our current world. But let's hope that Powell doesn't go that route. Thanks, Michelle. Always a pleasure to have you, and good to see you.
Thanks so much.
Good. We'll see you soon. And for more information from UBS and anything else that we're talking about when it comes to these stories, visit ubs.com/views and make sure to follow UBS on social media. Lots of content on LinkedIn, Facebook, Instagram, and Twitter. Plus, check out our past UBS Trending episodes on demand. We're on YouTube on the UBS channel, as well as ubs.com/studios. And as always, if you have any questions about how any of this might affect your own portfolio, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great day. Remember to keep your eyes on what's trending, everybody. We will see you soon.